Well, the Magnificent Seven is in the red this year. Meta, Apple, and Tesla, the worst performing of the bunch so far, with Tesla off 46% from its prior high. Meta and Apple both down 18% from their highs as well. So what's next for the tech trade? Joining me, Brian Belski. He's the Chief Investment Strategist over at BMO Capital Markets. Brian, great to have you on here. I just want to get your take specifically on the Mag 7 here. Can investors still trust in the tech trade?
Oh, good morning, Yahoo. Good morning, Madison. Yes, the answer is yes. Just because stocks go down doesn't mean that they're bad assets or bad companies. Remember, 2022 was a very tough year for tech, given what happened in 2021. God giveth and God taketh away. And then we had this huge rebound in 23. 24 was about the AI trade. And maybe these tech stocks got ahead of their skis a little bit. But at the end of the day, these are monster companies that define the growth trajectory for the United States stock market. They are not going away. We believe, as we have for over 10 years, these large cap technology stocks, some of which you listed, by the way, some of those in the Mag 7 are actually consumer discretionary and communication services stocks, technically. We believe these now are the new consumer staples, quote unquote. Doesn't mean that you need to overweight those names. That's actually not our call. Our call is to overweight technology in general and to create a barbell. What's the barbell? You are equal weight or slightly underweight select names within the Mag 7, and you are overweight other areas in technology. That's called portfolio management tracking error, and that's how we think we're going to get risk-adjusted returns from here.
So what would you say is the single name in the Mag 7 that is the most buyable dip right now?
Apple. Apple's the best company in the world. It's got more cash than several countries out there. I think this notion of the Siri not being ready in terms of new AI, people are just using excuses to sell the company. This is a company that you buy on dips historically. It works until it doesn't work. But at the end of the day, this is still a company that defines innovation and great management and great products for the United States. So I would put Apple as the number one buy on the list in terms of trying to buy the dip.
And are there any repositioning moves that you are making off the back of this? I know that you hold all members of the Mag 7 except for Meta. At what point is the discount for Meta too good for you to ignore?
Listen, if we look at Meta and we look at how it trades from a fundamental and price performance perspective relative to Google, we're putting our money into Google. You don't have to own everything, Madison, by the way. Meta is a name that we would look at maybe if we see additional downside. But we've only recently, in terms of October, bought Tesla, and we have a very small position. We'd actually love to be able to buy more of that. We typically make changes at the end of the month. So we're investors. We look at positions and performance on our portfolios that we run for our great wealth management channel. We run just over $10 billion. And we typically make changes at the end of the month to kind of dissuade from big amounts of turnover. But we think the reaction in Tesla is massively emotional. We're letting feelings versus facts. And we do believe that this is a great buying opportunity longer term for a company that is just an amazing technology company.
Brian, I'm fascinated. Let's talk about Tesla for a second, because I've been fascinated by this story here. And just the degree and speed of the sentiment shift on Tesla feels like something I personally haven't seen. You've obviously been doing this longer than I have. I did a TikTok about this week. I have 170 comments from people who have said that they have turned bearish on Tesla. At what point does the fact that consumers don't want to be inside of a Tesla start to weigh on the company?
I think, again, everybody needs to slow down in terms of their emotions on Tesla. This has been a couple of months. Let's just take a deep, deep breath. This is a company that's been in the works for decades, that it continues to exude technology prowess with one of the smartest, most brilliant people in the world. Whether or not whatever your political connotations is, again, you need to set politics on the side and take a look at what that man has done with respect to his companies and his technology going forward. forward. We do believe that Tesla remains the best EV out there. We do continue to believe that its technology is the best with respect to Tesla robotics or driverless cars, and or what he's done for Starlink and SpaceX. So I think this notion of consumers not saying they're going to be in a Tesla anymore, or some of the actions and issues that they're displaying, I think is quite frankly deplorable. And obviously, I obviously don't agree with that type of behavior. But at the end of the day, this is a great company, and we do believe that it will be around for the next 5, 10, 20 years.
And I know you mentioned in your note that selectivity is critical when it comes to the tech trade. What are some of the names that you are looking at outside of those big tech names we talk about all the time where you see opportunity?
Well, we have the very good fortune of running what we like to call 8 separately managed accounts and 1 ETF and 1 mutual fund for BMO Wealth Management. And Oracle's a name that we've owned in our value portfolio for several years because it was a cash juggernaut. And then it quickly turned into a great AI name because of that cash and because of the R&D that it did with respect to surrounding AI. So Oracle would be our largest overweight outside of the Mag 7. Now, it's still a pretty big company, but it's nowhere near what we see in that. We also own a company called Broadcom in our dividend growth portfolio that has been an amazing company longer term. Qualcomm we owned a little bit of, and we are bottom fishing in AMD because we do think that AMD is to NVIDIA what Coke is to Pepsi. And we do believe that's a name that can do very well and actually has been unjustly beaten up here over the last 6 months.
And I want to end kind of where we started, Brian, on how the sell-off in tech is making you think differently, perhaps, about where the market is heading. Does the tech sell-off alone tell you that we are heading toward a bear market?
No. In fact, any second now, we're publishing a piece in the public domain talking about this correction. And I think that so many of my compatriots, colleagues, competitors are basing their opinions on what they don't know. And it's really, we're in uncertain times. And the uncertainty we all know is all about that T word. I'm not going to mention it because everybody talks too much about it. But what do we know? We know 3 things. Number one, as you said in the top of the broadcast, that the S&P 500 did finally academically enter into a 10% correction. We wrote about the anatomy of a correction that typically and historically since 1950, these types of corrections that happen this fast go right back up and recover just as fast, if not more. Thus, we remained very comfortable with our $6,700 and $275 targets in terms of price and earnings, respectively, for the S&P 500. That's number one. Number two, in terms of fundamentals, they're still flashing green, not yellow, not red. Everyone's starting to talk about a growth scare based on no absolute data that's showing that. And we have some cool charts that show earnings growth in the report. Lastly, we're not an economist, nor do we play one on TV, but the major economic data that we look at are not showing disintegration. On the consumer sentiment side of things, you mentioned November 2022. You know that was within 2 weeks. That was 2 weeks after the market bottom in October of 2022. That was the start of the new bull market, started in October of 2022. That was the bottom. So consumer sentiment, macro data is typically lagged. We would say be very, very cautious with respect to those types of things. And as long as everyone has become so bearish, we've actually become more and more bullish. So we feel very, very good to be a fundamental investor right here, right now.